Okay, so welcome everyone to our first panel at New Retail Fest, and the panel is titled New Retail is Here, How Has COVID Changed the Rules of the Game and What's Coming Next? So Jack Ma of Alibaba coined the term New Retail to describe the seamless integration between the offline and the online worlds in retail, and how big data, AI, and the digitization of the entire retail value chain will be the new normal. So today we'll discuss how new retail will look like in a post-COVID world, and what brands, retailers, and technology companies should do to come back from the crisis and face the existing challenges of growing competition from e-commerce giants like Amazon and Alibaba, reduced margins, and growing customer expectations, among many others. So we have four very special guests here. Will you all please introduce yourselves? Let's start with Lior and then move on to Meirav, Erez, and Eran.
So hi, thank you, Ben, for having us. Indeed, very exciting times. I think one of the key, maybe right now, knowings in the world is that everything is expedited. The new retail has been here for a long time, but now it's expedited. What we expected to happen in 5 years happened in a few weeks. So very exciting times and very happy to be here. My name is Lior Sion. I'm the CTO and founder of Bringg, where we help retailers match up to the biggest companies in the world in logistics and customer experience.
Okay, thank you, Lior. Meirav?
Hi, everyone, and thank you for having me. I'm Meirav from Riskified. Riskified is a fraud prevention solution and enabling e-commerce globally. We service almost 2,000 customers around the world, and I have to say Corona times have been very exciting here, and we've learned a lot, which I'd love to share with you later on.
Thank you. Erez?
Thanks. Erez Shachar from Qumra Capital. We are an Israeli growth investor. We invest in Israeli tech companies and their growth stages, and basically looking at the stages of between 10 million ARR to 100 million ARR. This is the area that we like best. And we've been investing in Israeli growth companies over the last 7 years, and no question that the last year was extremely exciting and eventful throughout the portfolio and throughout the deal flow in the market. And retail is a part of it, and we are seeing, the digitization of the retail, which is one of the largest global industries. And it's a good time to be an Israeli tech.
Thank you, Erez. Eran?
Hi, thank you for having us. So my name is Westman. I'm a partner at Viola Growth. Viola Growth is part of Viola Group, the largest tech investment house in Israel. And in Viola Growth, we focus in a way similar to what Erez from Qumra mentioned, in a late stage company, trying to help them to get from a late stage to very big, and investing throughout Israeli companies around the world, not domain specific. So it's more on the stage of the company. For full disclaimer, I led the last round investment in Bringg, so quite familiar with what we're always doing, or at least I hope I know.
Mm-hmm. Okay, so thanks all. Let me start with a generic question. How would you define new retail, and how do you think the world is going to look like, the retail world is going to look like in a post-COVID world? Anyone who wants to start, be my guest.
I'll try to pick an answer and be the first. So like I said before, I think new retail is an interesting word. For me, it's always been the path. I think a few companies, like you said before, Amazon and others, led the way. COVID expedited things, expedited customer experience. For me, retailers started to change when they went online, which went 20 years ago. Recently, in general, and because of COVID, they finally understood and connected that the logistics, the last mile, is a crucial part of the experience. You can have a great time on site and online, but if the delivery person coming to you is late or not on time, or the expectation is just bad and you're waiting too long, the whole experience is ruined. So the full experience is starts with the online and ends in the offline, and everything is connected. We see the omni-channel, what used to be called an omni-channel turns into a multi-channel, meaning it's the same customer throughout the experience of the different channels and not different channels that are separated. And for me, that's the biggest change that is happening.
Yeah, I tend to agree with Lior. More than creating new challenges, I would say that COVID disruption has highlighted and accelerated the existing ones, as Lior said. And the best-in-class retailers that were in the advanced stages of their digital transformation, they generally fared out better and proved themselves far more resilient during these times. And because having the tools and technologies in place to efficiently manage the omni-channel shopping flows, it provided them the necessary agility, I think, in these times. When you think about it, integrating a curbside pickup offer when you are already implemented in the past, when you've already done BOPIS, buy online pickup in store strategy as an example, then you can integrate curbside pickup in a matter of days. And when I'm talking about tools and technologies, yes, I'm referring to big data management, of course. Most retailers understood that the advantages and we're probably considering AI-powered solutions even pre-COVID. So the main difference is that today these are the conditions for survival, actually. So in my opinion, the new retailer has a lot to do with how fast and how effectively the different players will be at closing these gaps.
Yeah, and actually, I think some are actually opening gaps because new retail. There are companies that were born digital. Okay? So Amazon is, of course, the most glaring example of a company that started its business online and was digital from day one and changed the whole shopping experience forever. But what we're seeing today is that there is a catch-up game from the bricks and mortar retailers to become more and more digital, and they're all going through some level of digital transformation. We are seeing, during COVID, because we are invested in companies which are infrastructure companies for these players and are helping in this digital transformation, we're seeing huge demand coming in from retailers, both digital native and bricks and mortar, for upgrading their infrastructure to supply a better digital experience of online shopping, which goes from the customer acquisition initially to actually delivering the goods. It's the full experience, which is partially online and partially offline. And so, this new retail is actually converging with the old retail because now there is no traditional retailer that doesn't have an online arm and more understands that they need to transfer their business more and more to online shopping rather than to bricks and mortar. So there is a convergence of these worlds today, and it's a very interesting opportunity for anybody that's supplying anything along the chain in terms of the digital disruption.
I want to take a different angle. I think Lior touched it in his introduction. Your colleagues here spoke about the retailer perspective. I think it starts from the consumer. We as consumers had no choice to change. And if my mother now can order online because she has no other option, so many others follow that way. And I think that it took them time. I can give an example from Bringg that closed a very big grocery, but it took a very long time. And I explained the team there that probably the CEO is now packing stuff in the shops. He has no time to go. But obviously, as was mentioned here before, those that were more digital earlier, it was for sure easier transition for them. But in those that needed throughout this to move and build, it's very difficult. Like many e-commerce sites are closed before Christmas. All this kind of thing to do it is changing a wheel when you're driving 150 miles an hour. And you can see it also from other direction. If you look at the e-commerce aspect, we are probably invested in a company called Glasses USA or Optimax. And they are booming because in the US, they are selling prescription glasses in the US e-commerce. In the US, most of the optometrists, the glasses shops were closed, and people maybe they knew about this option of e-commerce for prescription glasses. Maybe they didn't know, And now for sure they know, and they got used to a new experience, and that's the company is booming in a very big way. So I think from the consumer perception, it's something that, as Lior mentioned, 5 years happened in 5 weeks, and then the retailer needed to adjust because that's what you want. You want to serve your customers better.
Okay, thank you all for the introductions and for defining new retail. Now let's talk about working during COVID. So for Meirav and for Lior, who are working for technology companies, for startups, how do you keep growing during these times? Do you adjust your sales targets when all sales are done via Zoom calls or just on the phone without meeting physically? And for the investors, Eran and Erez, how do you both invest in startups and raise funds for your funds when everything is done via Zoom? Do you do things differently, or is it still the same business, just using a video conference to assess the opportunity? What's different? What's similar? What's different?
So I can start from the invest. I connected, I think, the two because, as I mentioned, we had the pleasure to invest in Bringg. So we didn't stop investing. To be transparent with Bringg, we started to look at the company before because, as you probably know, due diligence takes some time. But the decision whether to push the trigger or not happened in the early days of the COVID. And it was not an easy decision because it was a big check to write, and in a world that changed to all of us. But then we go back and look at our investment thesis. Our investment thesis was about what is going to happen in the retail and what Bringg can help the world. And it's actually made the decision easier than even before. We do continue investment. We made several investment of new companies. We have some other companies in the group, like Sight in the retail world as well, that just announced their round C a couple of weeks ago. We have made 2 new investments in Viola Growth. If I remember correctly, we met the founders before, but all this due diligence and all the negotiation were done via Zoom or any other tool that works online. So business continuing. Obviously there are some domains that were affected, and there are some and affected both ways. Some domains like retail in most companies are growing very well, and some domains unfortunately were hurt.
Yeah, I think you can see here how things have changed. I mean, looking at what we're doing right now, I don't think I've ever done this this way before. So yeah, it's a lot of new opportunities. On the one hand, I can now talk to people all over the world and still see my children for lunch. So that's a nice combination between the two. But it definitely changed a lot of the way, we're thinking not only about how do we work within the company, but how do we balance everything. And I used to meet a lot of my partners. I had partnerships at Riskified, so I was all over the world. And I have to say, on a personal level, I love meeting people face to face. I still miss it today, but I think we adjusted a lot of the business, a lot of the thinking, the products, our go-to-market strategy fairly quickly. We were also lucky to be in an industry where we could grow very quickly. As data gets here, no matter what happens around the world, we can utilize it and we can make a good effect on a lot of our merchants, help them grow very quickly, which was very exciting, and of course, adjust everything accordingly.
Now, I think that we need to think about this in some time perspective, because currently, I think that when we're looking at our portfolio companies and we're looking at ourselves, and our business wasn't really disrupted, and in many cases, they actually accelerated and became much more efficient. I think Riskified is a good example. I think Riskified has accelerated their growth and reduced their cost structure in time because there was no travel. Everything needed to be done remotely and so on. So just the initial impact is a very positive impact on the business. But I think that it's starting to become more testing as time goes by. And I think that to maintain over time, company culture and enable scaling of organization. I think scaling of organizations is first and foremost a very strong company culture that is instilled in all of the employee base as the company grows. And doing this over time, over Zoom, I think is very, very difficult. And we're starting to feel the pain in many places, that it's still not reflected in the business numbers, but I think it is reflected in how people feel, and it is reflected in the productivity of parts of the organization. So I very much hope that we will see this as a short-term venture into remote working, and we will get back to at least a hybrid mode in which we can actually see each other, travel to see our customers, our partners, and so on. I personally miss it very much as well. And it's having. I have 4 boards in New York, and I haven't seen my partners, CEOs, founders of the portfolio for 8 months now, and it's really I just miss them. So I think that it's way too long, and it's going to become more and more difficult as time goes by. There's no question that there are changes in how we're going to work, and that we will have much more remote working, and it will be more legit to have a sales call without ever meeting a person and actually closing a deal. And these are good developments, but I think long term, we should get back to work meeting each other.
Yeah, I'll take maybe a slightly different perspective. I completely agree with everything that was said before. I just think that the way I look at it, it depends on who you're working with and who are your, in a way, customers. If we think about salespeople at the front, especially in organizations that are global, and most Israeli startups are global, a lot of them were spread all over the place anyway. They work remotely. Maybe they didn't close a deal remotely and they had to speak face to face, but we saw that people overcame this. Maybe it will continue, maybe not. But as we go down, up the organization, and we talk about success people, for example, they also met their customers face to face, but they also a lot of times had to see what is happening in the field. And actually, especially in Bringg and logistics, which is a physical exercise, they had to see what is happening, and this is more difficult. As you go deeper into the company, product and R&D, that's a different scenario, I believe. Those are teams that are very used to working together, strongly coupled, and daily meetings, daily meetups, cross department, cross teams, cooperation, whether it's internal to R&D or R&D and product and the rest of the company, and so on and so forth. I completely agree with Erez. At the beginning, there was a sense of crisis, and everybody stood up to the crisis, and actually performance and efficiency increased because it was something that we had to overcome together, and that together was very strong. But time is passing, and the burden of working from home and being alone, depending on different people and ages and where they live, but it's becoming more and more challenging. New people, like Erez said, that are joining the company have never worked with others face to face, and they are closely related in terms of work. And I do see the challenge starting to be more and more, difficult. I think it depends on the level of communication internally on the organization. So some teams like product, this is what they do. They communicate, and it's very hard. R&D people, a lot of times, feel fine with working on their computers for long hours. So they might have better ways to handle it. Completely agree, though, as an entrepreneur, it's a huge challenge. A lot of opportunities will come in this area. Nobody knows exactly what will happen. It's going to be interesting.
Okay, great. So let me ask a specific question now, and I'll ask Meirav because I want to talk about the problem that you're trying to solve at Riskified, and the solution, or your solution. Okay, so let's talk about how today's consumers are more influential on how business gets done obviously in crisis, in these times, businesses should cater to the exact needs of their consumers. They don't have time or the resources to invest in other big plans. So what are some of the best strategies that you see to win over these new types of consumers in these difficult times? Or maybe you can also share a bit about what Riskified does, what your solution is.
Definitely. So Riskified started out over 7 years ago as a fraud prevention solution. And we were first in the market to actually take chargeback liability from the merchants and move it to us, meaning we look at the transactions that merchants are receiving online, and we make a decision if this is a good transaction or a fraudulent transaction. If it's a good transaction, we shift the liability to us, offering the merchants a full chargeback guarantee. So if we were wrong, we put our money where our mouth is, literally. So this is how we started out. But later, and I'll talk a bit about it as I answer your question, we learned that it's not only about the fraud, but also about approving more transactions. So what we want to do, our mission, is to grow the online revenue of the merchant. So we're looking everywhere at the funnel, at the purchase funnel, and trying to solve all the leaks in the funnel, and there are a lot. We want to make sure that the merchants can stop all of these leaks and capture the transactions, converting the customers into shoppers. So as you can hear, we didn't start doing this today. We started a while back, and actually so have retailers. They've been focused on their clients from day one. And I think what we're looking at now is not only having good customer service, but a great customer experience, which is good customer service on steroids now that we are in COVID era. And we know that customers have already been influencing how business gets done for a while because they have unlimited access to information. They have a spread of distribution channels. They have abundance of choices because everything is global now and everything can be done at any time. So they've had a lot of control for a while. They're looking for these ultra personalized shopping experience and extreme convenience and impeccable customer service. And now if they want to buy a gift card rather than the gift itself, or if they want to browse on the website and then buy on the mobile, then merchants need to embrace that. And it doesn't matter who the customer is. Like Lior said, his mother is now online, and we need to make sure that she also gets the best customer service, although she's not used to shopping online, right? So we want to make sure she can go through this funnel with the best customer experience that we can. And when we look at studies, they indicate that omnichannel, or what we talked about, new retail customers, they spend more and they buy more frequently. So we want to make sure that they get through this funnel, because losing them is not only losing them on single transaction, might be losing them for a lifetime. So when we look at merchants, we want to understand how these erratic shopping behaviors, the corona buying patterns affected them, and how do they allow these newcomers, the new products and the new habits to go through the purchase funnel and still be profitable in the long run. So these merchants need to be agile, yes, customer-centric, but solution-driven. Sounds easy, but actually I think it's all about using the right technology partner and using them right and using them at the right time, because data is key now. And as merchants are becoming more and more, they're going online, even the old brick and mortars, they're seeing an influx of data. And only by fixing the leaks in the purchase funnel, we can ensure that these shoppers are converted into happy customers. I'll give you an example. A retailer, when they see a new customer, they tend to become risk averse, right? They don't necessarily want to approve them. They don't know who they are. They don't have any digital footprint. But Riskified, using our data, we, at over 65% of the times, we know the person. They're not new to us. So we don't feel like we're taking the same risk as the merchant, and we're happy to let them buy. So this is helping merchants make more sense of these new customers that they're handling right now.
That's impressive. So any any what's the word? Someone who walks in a store, an online store, a random person, on average, among your clients, you will know 65% who they are. That's amazing.
Yes, because
Okay.
we see different industries and different countries around the world, and we can cross between them.
Great. So obviously the retailer alone cannot do that. I want to ask you another question, and Erez, since Qumra invested in Riskified, you can also talk about that. So the trends, what are some of the fraud, online fraud trends that you know from your own experience, not just from studies? What's going on in the market, in the fraud market right now in the world?
Yeah, well, I have to say, fraudsters are constantly challenging, which is good, right? We're kept in business, so that's the good side of it. And they don't mind working from home, actually. So they're not concerned with this whole work from home thing. And during COVID, we saw a growing problem because not only are there more fraudsters sharing tips on the dark web, and I have to say, they really like to cooperate with each other, and they have like these one-on-one classes, and they help each other a lot more than we do here in the legit world. So they share a lot of information. And not only that, but they also share a lot of new techniques. As a merchant, first you must understand the MO, right, in order to prevent and have new strategies. So some of these new challenges that we're seeing today are, for example, a surge in account takeovers, so ATOs, which are very sophisticated, or friendly fraud, or fraudulent returns and prepaid cards. So they're
What's a
not.
friendly fraud?
So I'll talk a bit about the ATOs, which are sophisticated, and the friendly fraud. I'll start with your question of the friendly fraud. So the friendly fraud are the ones who, I use the credit card, but then I call back to say it's not me, or maybe it's my son using the credit card and calling back to say it's not me, asking for a chargeback.
Mm-hmm.
Exactly. So, or in COVID times, we saw a lot of friendly fraud, unfortunately, in travel. OTAs were overwhelmed with people asking back for their money, and they couldn't handle everything. So rather than waiting for the OTA to handle all the service-related questions, people just filed chargebacks, which is a great deal of problem when you're trying to kind of sort out your regular customer service. So this is what we call friendly fraud, and it surged during these past few months. But I think the interesting thing that we saw is actually the account takeovers. So, fraudsters, they also read the morning news. They know about customers who've created account, what we call lapsed customers. So I have an account, I haven't used it for years, but all of a sudden, we see a golden opportunity as a fraudster. So that means that they can spot an account and attack it. So get all the information on the dark web. It's sold, I have to say, very cheaply. So you get all the credentials, you get the password, you get your mother's maiden name and the date of birth. And all of a sudden, a fraudster has all the account information. They can log in, and then what the first thing they do is they actually change the password, right? So now they have the account with a new password. They can buy anything. They ship it to the customer who's now a victim, right? They ship it to the customer address. They don't even have to buy any risky product, right? They can buy cat hammocks, as we've seen. But after the order was approved, they cancel it. But here they don't ask for a refund on the credit card. They actually ask for a store credit. And now they can turn around and sell it back on the dark web. If a regular account details will sell for $5 to $10, now an account with store credit in it can be sold for $100. So just sitting at home doing nothing, the fraudster added another $90. This is sophisticated fraud. So as I mentioned before, these times have called us also to expand our service and see where the fraud comes in and where do we need to stop it. Are we just looking at checkout to make sure that no fraudsters go through, or do we need to look at actually at login to make sure the right account owner has logged in? So yes, a lot has changed.
It sounds like fraudsters are everywhere, and who knows, they might be listening to us right now. So thank you for that. And Erez, if you want to add anything.
I do want to add, not regarding fraud as such, but I think that when we came into Riskified, it was really doing chargeback guarantees and fraud prevention. And I think that over the years, Riskified realized that really what they're doing is that they're enabling e-commerce retailers to provide a very smooth shopping experience by the fact that deals are approved instantly or disapproved instantly, but the experience is very smooth. I don't know how many of you have tried shopping online in the US with an Israeli credit card while in a hotel in New York. It's practically impossible to do. And you always get bumped off the site. You get 24 hours after you get approval of the acquisition, you actually find out that you're not approved and you can't purchase, and it's really frustrating. And if you're a good customer, okay, you came all the way to the checkout, you gave your credit card and you want to pay, and somebody doesn't accept your payment because they think you're a fraudster just because they don't have enough understanding and data, this is really a terrible online experience. And by resolving this, by actually taking this off the table and making sure that all deals are either approved or not approved instantly, the shopping experience has changed dramatically for the e-commerce sites that are using Riskified. And the approval rates have actually gone up, and sometimes gone up very dramatically. The impact of this on the business of the retailers is unimaginable, because we're talking about pure bottom line. Just imagine you're taking today 5% more of the deals than you've taken before. For some retailers, this is billions and billions of dollars a year of business that was saved by companies like Riskified. So I think that we need to understand that in this new retail world, where everything is a digital funnel and data is plentiful in real time, the digital infrastructures on which you build your e-commerce experience are absolutely critical to the success of the business. It doesn't really matter which product you're selling. It matters a lot which user experience you're providing along the funnel. Okay? The products in many cases are the same products. Okay? A lot of them are commodity products that are sold in different locations. The basic experience difference is really going through the funnel. So companies like Riskified are booming in this age just because they are enabling a user experience which is second to none.
Sounds like the payment approval process is the last mile before the last mile, and the actual last mile is the fulfillment and delivery. So I'd like to ask Lior and Eran about that. Maybe Lior, you can start. Maybe you can tell us how much customers really care about the fulfillment and delivery process, and how much should retailers and brands care about it? Maybe they don't, know how much they should care about it.
Yeah, it's interesting. So it's interesting in the fact that when we started, it was a lot about let's make fast delivery, and indeed numbers and reports show that 67% of customers, if they don't have the option to deliver today or deliver within a day, they leave the checkout and just go away. But the more interesting thing, and something that we've learned, is that 82% of customers are leaving the experience if they don't receive options. Meaning maybe options are more important than speed sometimes. The ability for me as a consumer to control when things are delivered to me and the cost. Maybe something I need in a hurry and I need it quickly, but maybe something I actually need it next week and I do not want it to arrive today. Maybe something is super important and I want to pay for it, an extra $10 that it will arrive quickly, but maybe I do not want to pay for it extra because I'm ordering 5, 6, 7, 9 things today and I don't want to pay an extra $100 for delivery. It's not that important. And in general, if we go back to the experience, it's all about psychology. It's all about the feeling that the customer has that they are in control, that they are offered options. And when they do offer options, they get options and the options are correct. It's not enough to offer options. Obviously you have to, those options have to be real, and you cannot order something for next week and get it in 2 weeks, or you cannot order something for today and receive it in 2 days. So it's a combination of those things, and this is what the consumer expected. They expected because there are companies like Amazon that not only offer it, but also provide the value. And the merchants themselves, the retailers, it's slightly harder for them to understand because it's a long term. Just like Meirav said, it's a relationship thing. It's changing the cost of acquisition in a way of a customer and not the transaction value. So maybe on the transaction of a specific item, one-time customer that is arriving, they might make a little bit less money because they are delivering next day for free. But the cost of acquisition, the relationship, the customers returning to this site because they were giving options, reliable options, good customer experience, this is priceless. Like we discussed the entire hour almost, the early adopters of this approach have already seen the value. I think that today, everybody sees and understands the value. It takes a little bit more time to prove in each location with each retailer. But Amazon was the first to talk about it 10 years ago, when they were still losing money, but they always said we are investing in customer experience. We care about the customer. And today they are where they are. And retailers are understanding this, and now they're understanding that quickly.
I'll pick up on where Lior ended. Speaks a lot about Amazon. I think it's a little bit even greater than just what Amazon shows, and everybody, of course, wants to compete. I think if you look at the enterprise software, a lot of the UI, UX issues improved dramatically because we as a consumer used to whatever application we use on our mobile, and then we expect that also Salesforce will have the same user interface and many others. I think when you come to the last mile delivery, which Bringg provide, of course, Amazon was a major player in the field, is a major player in the field, and impacting the way that Amazon competitors are playing. But it also has to do with what we get from Uber and what we get from many others of those crowd source delivery. And there is no reason why I can track my Uber driver, where it comes, who is he, when he will arrive, and exactly when I should go down when I do the delivery online. And I think that the consumer experience is changing, and expectations are going higher. Lior spoke about some that it's taking them longer. There are, you speak with a lot of retailers. Some of them are still living the old world, and they speak with the trucks that they have and the fleet that they have. And companies like Bringg are serving multiple fleets. It can be your own fleet, it can be DHL, FedEx, and it can be a crowdsource delivery like Uber. And this is the new world. So the new world comes from the expectation of the consumer, the supply of multiple fleets that you have that may be good for one city, this fleet, and for New York City, you need 5 fleets. And of course, with the technology and having a technology like Bringg that allows you to, through all this supply chain, so-called, from the shop or warehouse to the driver up and all the way to the consumer, getting it, as we all say, in Tuesday at 5 o'clock or within 24 hours or within an hour. This has changed the new experience. And I think that it's always very difficult to predict, but within some time, it can be a year, it can be 3 years. This will be de facto the normal. So this is just about time, and obviously early adopters are gaining. And you can see it also here when we go to groceries. Some you know to order online, some you probably won't try it.
Mm-hmm. Okay, thank you.
I think Ben,
yeah.
Ben, if I can add, I think to tie the two things that Meirav and Eran said, and Eran, thank you for understanding, Bringg that well. But I think Meirav spoke a lot about data, and Eran spoke about technology. I think those two are combined because everything that we are doing, actually, the startups. What's interesting about it is that we are not adding workforce. We are in a way layering technology and data analytical skills and abilities on top of existing flows and improving them without changing the physical world. It's just a technology extra. I mean Uber and Get before that in Israel there were especially getting Israel, there were no new taxis. It was using the same taxis, using the same drivers, nothing, nothing more than that, but a lot of technology on top of it allows people to achieve things that were not possible before. So Meirav spoke a lot about the big data and knowing customers that have never been in a specific site before because you combine data from other locations. Eran said that things that we are doing, for example, that combining fleets that just didn't exist 10 years ago. There was no Uber deliveries 10 years ago. There was no DoorDash. There was no Postmates. Connecting to external fleet was very difficult. This is happening all over the world, and retailers can use that technology and those advances to their own good.
And it goes another way as well. Yeah. The data and tech that is layered on top of retail and really does what this provides this new experience of new retail that we're talking about is actually now being deployed in other places. And a good example is Fiverr, which is actually selling services very similar to the way that retailers are selling products. And they actually took Amazon as an example of how to navigate through a huge amounts of products and get to the right product for the right person, and actually deploy the same thinking process and the same UI UX to services and to freelancers. And if you look at the earlier freelance solutions online, they try to emulate the freelancing world of today using technology. So they would put you together with a freelancer and you would start a negotiation and you would start a process of trying to close a deal, okay, like you would in the offline world. But what Fiverr understood, and the reason they became so successful, is that there's no reason to do that. You could package services as products and do exactly the Amazon experience with services and navigate people through UI UX, which is very smart and uses a lot of data to surface the right services to the right people and provide a matching between supply and demand, which is a retail matching between supply and demand. So I think this is one example, but we're seeing, this new retail experience being deployed today in very different worlds that wouldn't be close to retail before.
Okay, I'm very happy that you all spoke about what's coming next. What's the future, whether it's the new normal in taxis, right? Taxi riding. So Lior was the CTO of Get, which is an Uber-like company controlling the market in Israel and a few other big cities around the world. And as you talked about productizing workforce skills and freelancing. So we just have a few more minutes left. Let's fantasize now about how the retail world and the shopping experience will look like, in 2025 or even 2030. Will we see drones making deliveries? Will false negative payment approvals, Meirav, be gone, and everything will just be seamless and fast and fun? How the world is going to look like, and what retailers, brands, technology companies should build now.
No more fraud in 10 years. No more fraud.
Are you kidding? I just said that they always get smarter and will be needed always. So it will be fun, but I don't think fraudsters will go away, unfortunately.
Yeah, no, I was kidding. I think first it's a very good question, especially around also what will happen with workplace and how we would work in 10 years. I think those things are deeply connected. Drones, autonomous cars, autonomous warehouses, faster deliveries, faster options, and so on and so forth. They provide better experience. Why do they provide better experience? They allow consumers to have control, which translates, they allow consumers to have more time. They have more time to do what they want, whatever it is. I think retailers would have to, and it's already starting, they will specialize in either mass selling to the masses, selling and delivering to the masses, which is generic produce like Amazon today, and specializing in special deliveries for people who care about care deeply about a specific type of something. For example, I'm a runner. Most likely the things that I'm buying, the shoes that I'm buying, the clothes that I'm buying are not the same as somebody who runs, occasionally as a weekend warrior. We care about different things, and vice versa, cheese, wine, and so on and so forth. So some retailers would know how to do it in scale, using drones, using autonomous warehouses, online and all the data together. While others will do something close, organic, specialized to my need, type of produce that will be delivered quickly when I want it. All of it will translate to more time for people, and that would be the interesting thing. How would we work, and how would we live when we have more time? What would we do with this more time? Hopefully, personally, I hope that we will not use it to work more. We will do something useful about it. But I think
Yuval Noah Harari said that, since robots are going to do everything, machines, we're going to have all this free time. What are we going to do? And the other thing is that companies will need customers, so we will be actually shopping all the time. I think that's what he said.
So shopping is fun, as long as you understand that you're doing it for fun. Maybe psychologists will make a lot of money, and it will be the new thing. In terms of what will happen, I think in 5 years, at least in logistics, it will be without trying to scare anybody, it will be the age of machines in logistics for sure. So today there are a lot of people involved. It will be more and more autonomous. But what's more interesting, Bringg, the way we define ourselves is orchestrations of delivery systems and logistical chains. It will be not one machine like we are today delivering the last mile. It will also be connecting to the autonomous warehouse. It will be connecting to the first mile and the middle mile. Everything has to be autonomous. I think that, by the way, in that aspect, COVID and contactless deliveries is a strong pusher in that direction. No human interaction in the delivery and buying of things as much as possible. So that would be interesting. I think also Bringg is nicely poised to help customers reach it. And then once you start thinking about it, connecting the last mile information, like the house and the person that ordered it and so on and so forth, to data lakes like fraud detection, because this person ordered something and they actually signed for it and they didn't return it. What does it mean on the next time that they are buying something, and so on and so forth. Once those things those systems start to talk to each other and share information and share data, that will be the experience, and then everything will be faster and better.
Okay. Meirav, Erez, Eran, do you want to add something about the future?
I think Lior was touching about data. That's part of it, and I think and also what Meirav was speaking about in terms of the fraud, because I think data will be the biggest part. Even at Bringg, today they have tons of data that practically we are not actually, or they are not using actually about when am I getting what, am I expecting a delivery today at 4 or within an hour. And eventually they will know about millions and tens of millions, 100 millions and billions. When do they get delivery and how, and what are their preference? You take the same thing about ideas that are running now that are in early stage about cash-free free checkout, like Amazon Go or Trigo that you mentioned that you spoke, Trigo Vision. And then you are going to the shop, you are and check out without any cashier at the end, but using the app of the retailer. Eventually the app will know, or the retailer will know via the app and via what I do online, what I'm buying in store, what I'm buying online, and the complete data set will be around us. And then all those frightening ideas that Lior was mentioning, that they will know exactly what we want, will be able to have it. So I think the data that will be around it will be huge, and probably the most significant thing.
I think that new retail in general initially was very lent itself very well to very large aggregators like Amazon, the supermarkets of the online world, and the user experience was more or less the same for anything that you buy. And I think that for early days of near retail, it was absolutely necessary, and we are seeing a very, very concentrated industry in e-commerce in general. These are large behemoths that are becoming larger and larger in what they do. But I think that there is an interesting trend going on now in which the actual shopping experience online is becoming a part of the product. Okay, and that lends itself to different shopping experiences for different types of products, for specialization in different areas, and for these new DTC companies, the direct-to-consumer companies, which actually understand that the delivery mechanism, delivery in the largest sense, from finding the customer online to actually providing him the product or service, is the product. Okay? And Warby Parker and Harry Shake Club, Dollar Shave Club, Glasses USA, Resident, and Casper. I mean, these are all companies that understood that the whole chain is really what this is all about. And it's not about selling a mattress. It's selling a user experience of how to get a mattress to your home and make you happy with it, or glasses, or whatever you'd like. And these new models, I think, are going to become more and more prevalent, and the supermarkets will still be, very important, and people will always do most of their shopping there. But I think that specialty products and specialty delivery channels and conversion channels will emerge bigger and bigger.
Sometimes we spend more time browsing and shopping than using the actual product, right? So it must be that the shopping experience is important. Meirav, do you want to add a few last words?
Yeah, I was just going to say, and the customer is still going to be key, even, if they buy globally, but they want to pay locally and they want to return locally, still it's all going to be, as Lior said, the customer has control. And everything will need to be, around them, around their needs, around their convenience, around their desires, whether the refrigerator is going to stock itself, but for what they want. And sorry to say again, Leo, the fraudsters are still going to be there, whether it's me ordering or my fridge ordering for me.
You lost me.
Who knows? Machine might.
You lost me. I'm the center of everything.
So machines might become fraudsters themselves, right? They're going to have conscience, and we're going to fight the machines.
Wow, this is going far.
Exactly. So in our next conference, right, or in 2025 when we all meet. So everybody, thank you very much for joining us. I learned a lot personally, and I think our audience learned a lot as well. And I'm curious to learn more and to watch your companies and your funds and see how you're moving on and forward with with everything that you're doing, and how you keep on growing and enabling the retailers and the brands to stay relevant and deliver an even better shopping experience to all of us. So thanks everyone for joining, and I hope to see you in our next event.